Amid the turbulence of the pandemic, Sovereign Wealth Fund GIC posted its highest returns since 2015 for the latest financial year. It recorded an annualized rolling 20-year real rate of return of 4.3% for the year ending March 31st. This is up from the 2.7% annualized return for the previous financial year. But GIC also said it's wary about the global economic outlook and expects the returns from a broad range of asset classes will be low for the next 5 to 10 years. The Straits Times' associate editor Vikram Khanna weighs in on GIC's robust performance and what it sees going forward.
One is the base year effect. If you remember 2020 March, the markets crashed, right, because of COVID. But since then, over the next 12 months, there was a huge rebound because of, the fiscal stimulus by governments, central banks all over the world cutting interest rates. So the markets really boomed over the next 12 months. So the GIC points out that the return over that period was like 53% over the last, between March 2020 and March 2021. So that's one reason that lifted the performance of GIC's portfolio. The second thing was that in the 20-year calculation, one bad year fell out of the calculation. So you see what happens is that this covers the period from 2002 to 2021, right? Now, the previous year covered 2001 to 2020. What happened is this year is that the bad year of 2001 dropped out. That was the year of the dot-com crash, right? So that dropped out of the calculation. And then, as I mentioned, this very good year of 2021 ending March, that got included in the calculation. So one bad year dropped out and one good year dropped in, right? So that the combined effect was that was to raise the performance of the portfolio. But going forward, they are a bit cautious on the macro front because there are many uncertainties. One thing is the trajectory of the pandemic. We don't know where it's going to go with the Delta variant and all that. The other thing is the variable rate of vaccinations around the world. Another thing is possible rise in inflation. We're already beginning to see it in the US. Another thing is big government debt, lots of government debt everywhere, which means there's less policy room for governments. And you already have very elevated valuations in the markets, right? So on the macro front, they're quite cautious. But on the micro front, they see some opportunities. And there are three areas where they see these opportunities. One is technological transformation. There's a lot of that going on. So this will create new investment opportunities in certain targeted areas. The second is sustainability and climate-friendly practices. That's also opened up a lot of investment opportunities. So they're going to go there. They've even set up a sustainability fund to invest in climate-related investments. And the third is the geopolitical contest, rivalry between the US and China, which is going to lead to all kinds of disruption, which may create opportunities of its own.